2 of Middays. We're coming at you live from the Element Wealth Studio. It's our pleasure to welcome now Gordon Fellows. He's the president of the Mississippi Bankers Association. Hey, Gordon, good to see you today.
Hey, Gerard. Thanks for having me. Always good to be with you.
You bet. Let's start out, Gordon, talking about a major announcement that came out of the U.S. Treasury Department last 2 or 3 days, and that is that U.S. companies will not be required to report this beneficial ownership stuff. This was a beneficial ownership information, BOI is the acronym for that. This is something that was imposed during the Biden administration that would have inflicted quite a hardship on especially our small and mid-sized businesses who would likely have to engage the services of attorneys and CPAs and the like to fill out all this paperwork. And not doing so could result in a very stiff penalty from the federal government. Looks like that's essentially been, for the most part, dismantled. Your thoughts on that?
Yeah, so the beneficial ownership rule was just part of what I call the regulatory tsunami of the last few years, and that's not an original term. That's a term that a lot of folks around the banking industry have used because there's been so much new regulation. The beneficial ownership rule was just one of those. The positive thing we've been hoping for as the new administration has settled in is sort of we get a regulatory reset. And so a lot of these rules get pulled back. And this week has been sort of a big week for that. The Treasury rule, that announcement was sort of made on Sunday, right, with beneficial ownership getting pulled back. That was a good step. Yesterday, the FDIC announced that they were pausing implementation of 4 different rules that they were working on. One of those was related to board director responsibilities that we thought would have gotten the boards way more involved in management than necessary and probably created a bunch of costs because of that. So, we're beginning to sort of see several of these sort of really complex financial rules beginning to pull back a little bit, which is good and helpful. That doesn't mean that there's not adequate regulations in place. I think there are, but some of this sort of overwhelming new regulations that were coming out of the last few years are beginning to peel back a little bit. So certainly good news for small business owners as it relates to the beneficial ownership rule. I do think it's still going to apply to foreign-owned companies, which I think was really law enforcement's point, and I think that's probably a good thing. That really ties in, the beneficial ownership rule ties into the broader anti-money laundering regime that banks are subject to. And we are hopeful that we'll begin to sort of see more focus on safety and soundness and as it relates to bank regulations and a little less focus on all of sort of the secondary purposes of regulation. So it's interesting. It's an interesting time for sure.
So, Gordon, you and I have talked about this before. Of course, the entire nation, especially from a business perspective, we're all anxiously awaiting to see the outcome of this budget debate process, looking in particular for the extension of the existing tax environment, which was implemented in the Tax Cuts and Jobs Act, the so-called Trump tax cuts in 2017. But it's important also to recognize just what an impact regulations have on the economy. And you happen to represent a group of people that may be the most regulated of any industry, honestly. Next to that would be health, your money and health, by far the most regulated industries. And this has placed financial hardship on the financial industry, and those costs have to be passed on to consumers. So it's good news that we have, I think, a more business-friendly administration that's looking to strip away many of these regulations that honestly just were more political, honestly, in nature than they were functional.
Yeah, I think that's right. And it's important when we're talking about bank regulations. We think not all regulations are bad, right? Like
Sure.
Safety and soundness focused regulations and a regulatory scheme that helps ensure depositors are safe and that banks don't engage in unnecessary risk is good for the economy, right? And so But when you think about the regulatory structure that banks live in, there are 3 or 4 federal agencies, depending on the type of bank, and then a state agency for most banks. And you're not only are you regulated, you're constantly examined, right?
Yeah.
Every 12 to 18 months, there's people from the government in the bank. Kind of making sure you're complying with everything. And if you're a bank that's over 10 billion, you're constantly examined. There's always examiners in the bank. And so you got regulations and you have sort of this examination structure. And so as the new group sort of settles in, we're hopeful that some of the, to use your words, some of the more political regulations, not what I would say the regulations that aren't safety and soundness focused, but are sort of secondary focused, that some of those are going to peel back. One of the big ones we're watching really closely is the 1071 rule. It's part of Dodd-Frank. This is the small business data collection rule, right? And this is a really good example. The legislation that created the rule sort of said we want the CFPB to collect 12 points of data on small businesses. The Biden administration took those 12 points of data and blew it up to like 83 points of data, right? And so we're hopeful that that gets scaled in a good bit. And I use an example, right? The new administration has named several of their agency heads. So there's a guy named Jonathan McKernan who's been appointed to be the new CFPB director. He's not through the confirmation process yet. But I think they're going to vote on him later this week in the Senate Banking Committee. McKernan is sort of a known quantity, and he's the kind of guy that tells you what he thinks. And I think that we'll see him really focus in on tightening up the CFPB in particular, right? Where some of these rules have sort of been really much broader than Congress intended them to be. I think we'll see a lot of tightening there as McKernan sort of settles in. So hopefully the Senate Banking Committee moves his nomination through pretty easily later this week.
Are your members concerned about tariffs and some of the fiscal policy we're seeing coming out of Washington? We see the 10-year coming down, but you've probably seen, I talked about it earlier in the program, the Atlanta Fed is predicting negative GDP for the quarter.
Right, yeah, and I was actually at the Atlanta Fed for a conference last week, and they didn't prep us on that. I wish we would have talked about that a little bit last week. But yeah, it's interesting. The first call I got about that was from a farm bank this morning, a bank in the Delta, and of course, sort of the China response to the tariffs and what that's going to do to the farm economy is a big concern. And Frank at Delta Counselor, Mike at the Farm Bureau are probably better qualified to talk about the intricacies of that than I am. But I can tell you, I know that farmers have been struggling for a while now, and that I don't think this tariff situation is going to help that. I think it's going to make that a lot more challenging. So if I'm a policymaker in DC, I'm keeping my eyes close on ag and how the tariffs impact ag right out of the gate. I assume that there's going to be some real reshoring of some manufacturing back into the country. That'll probably be a good thing. But I do think prices are probably going to go up. And so, I think sort of stepping away from that and kind of looking a little more big picture. You mentioned the regional Fed bank in Atlanta. All the regional Feds collect data on, what business expectations are going to be over the next 6 months. And from like November to January, that number got really positive, right? And then as January sort of began, a lot of the metrics aren't really tracking against where we thought we were going to be in November after the election. And I think some of the uncertainty around the tariffs has slowed down nationwide some of what was expected to be early sort of corporate investment. Now, I don't think that's necessarily in playing out in Mississippi the way it may be playing out in some other places. But I sort of noticed that as a data point that was kind of interesting. Some uncertainty around the tariffs and probably around Doge too, and all the sort of move fast, break stuff mentality that Doge has brought is probably creating a little bit of hesitancy on some big employers and some big companies on how they want to deploy capital. So hopefully that all kind of moves quickly here, and we kind of get into a little more of a settled economy pretty soon.
Yeah, I think you're right, exactly right. It's just so much happening in such a short period of time. There's just a lot of anxiety and uncertainty around that. We just need the dust to settle and figure out where we are. Gordon, always good talking to you. Appreciate you coming on, and I'm sure we'll be talking to you soon. Thanks a lot, man.
Thanks, Gerard. Good to see you.
Yeah, man. We're coming right back in the Element Wealth Studio.